Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Josef Schachter, founder of the Schachter Energy Report online at SchachterEnergyReport.ca. Josef, welcome to the show.
My pleasure, Jim. Looking forward to it.
First of all, can you tell us about the Schachter Energy Report?
Yeah, the Schachter Energy Report was created in 2017. I spent most of my career on the institutional side of the business, and then some friends of mine suggested that there was a vacuum and there was really no information available to the individual investor on the oil patch, and that a lot of people were being pushed into ETFs or into the large cap names. And so we decided that we would try to move forward with a product which we introduced in April of 2017. And we're covering both in individual energy companies in Canada with either domestic or international business lines, as well as the energy service side. And right now we cover 34 companies. And so we are covering everything on large cap like Vermilion or Tourmaline, and then we go down all the way to small cap companies that are producing under 10,000 BOEs a day, like an in-play or an essential energy if it's a service company. And we've had a very good response from subscribers. And in 2 years, we built up quite a team here to provide the product. And we're planning to maybe even add more coverage as we grow the business in the long term. So, the sector has not really performed well yet, but we think that 2020 is going to be the year that we see the price of oil move higher, over $70 a barrel, and that we're looking for an extended 4, 5, 6 year bull market. Just think about what happened with gold a year ago. Everybody was in the doghouse, and then, the breakout that we saw in, 1350, 1360 took the stocks, and many of them have had fabulous performance. So, energy's been in the same kind of doghouse since 2014, the last time we had $100 oil. We went down to 26 in February of 2016, and we think a multi-year bull market is starting, and that the key driver for it is going to be growing demand from India, which is going to be accelerating as their economy matures, and that will be the thing that means that the price of oil will have a sustainable multi-year bull market.
Now, you may have answered this already, but do you follow and invest in large cap, mid cap, and junior oil and gas stocks? Yeah,
our client base wants us to be in all areas, so we break down our coverage into companies, and we break them down into large cap over $1 billion, intermediate cap 400 to $1 billion, junior between 100 and 400 million, and small cap below 100 million. A lot of companies that used to be intermediate are now junior, and a lot of juniors have become small because of the devastation in the sector. But we think that in the recovery, if the companies have the right asset mix, have the right management, have balance sheets that can handle these tough times, that the upside in the new cycle will be significant. If you look at the 1999 to 2008 cycle, 99 to 2002 was the skepticism years like we are now, but in 2002 things took off and the price of oil went from under 20 to 147 in Q2 of 2018. Something like a CNQ, which is not a small company, went up 25 times. If you look at some of the more entrepreneurial smaller companies, they did even better. So we think that the upside here is not potentially 10% compounded annually. We're thinking that there's 5 and 10 baggers if we're right, because the stocks are now so depressed and so undervalued that the recovery, if you put in volumes going from, let's say, 10,000 BOEs a day to 20, but the price of oil goes from 55 to 120, and the price of natural gas goes from 50 cents for AECO for spot to $3, you're going to be seeing massive expansions in cash flow, and of course that will then impact the stock prices longer term.
The second annual Schachter Energy Conference will be in Calgary Saturday, October 19th. Can you tell us about the conference and how people can sign up for it?
Yeah, the conference was started as an adjunct to the research product, and we did this because people, most investors, if they go to the annual meeting, they'll hear the legal, stuff, which takes, 20 minutes, and then they'll get maybe a 10-minute presentation about the company, and then maybe get a chance to ask one or two questions. The institutional market is used to having face time with the company's executives, and individuals are not. So we thought, why don't we get the companies to come out? And what we have is 45-minute sessions, so that's twice as long as you'd get at an institutional meeting. So the companies have a half an hour to present their story of who they are, what they're doing, where they're going, what they see as the prospects for the company and the upside. And then we have moderators in the room doing a 15-minute Q&A. The second part of the conference is we have lunch with the senior executives of the company. So if you own Vermilion, or if you own Tourmaline, or if you own Birchcliff, if you own Bonavista, you'll have a chance, Trican or Step Energy or, Essential Energy. You'll have a chance to sit down with the management team during a relaxed luncheon and get to know the company even better. So if you own the stock, here's one of the only real chances you're going to get as an individual investor to sit down with the company you own and be able to interact with them, see the individual's thought process, get to know the company better, ask the questions that are bothering you, and have face time with the executives. And the last part of the conference is at the end of the day, we're going to have a panel discussion with the indigenous leaders, and they will be able to, comment on, the differences between the indigenous groups that are not in favor of the pipelines and the growth of the industry and those that are, and then also, those that might want to be part of the ownership of TMX. So it'll give you, almost three parts to the thing. One, learn about the companies via the presentations and the lunch. And then, of course, the other part of it is finding out what the indigenous groups think and how they want to be part of the go-forward positive solution, which we hope is what is going to happen going forward.
We'll have more with Josef Schachter right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Josef Schachter. Joseph, what do you see ahead for the oil markets, short and then long term?
Yeah, Jim, I'll answer that in a minute. Just for the investors on the last question, those who are interested in finding out about the conference and also about registering can go to www.Schachter, SCHACHTER, energyreport.ca/conference. And then they can find out everything about it. And decide if they'd like to attend. The conference, again, is October 19th, Saturday, October 19th, at Mount Royal University here in Calgary. So what do I see ahead for the oil markets? In the short term, I'm cautious. I think that we're going to see, because we're now in the inventory build season, now that the summer driving season is over, we'll probably see oil prices back off, potentially even below $50 a barrel. I think we could see a double bottom in late October where, we see below 50 and the stocks get hit from here. And then tax loss selling, I think in 2019 is going to be as bad as it was in 2018, where we had the bottom in the market, if you recall, on December 23rd, when the stock markets in the United States and the oil markets bottomed almost consecutively that day. So I think there's going to be a fabulous buying opportunity here coming up. One of the indicators that we watch is the S&P Energy Bullish Percentage Index. Historically, at bottoms, gets down to low single digits. It also is a great indicator when markets are overvalued. They get above 80%, and it tells you the markets, have 80% bulls, that it's probably a time to sell. We're right now in the mid-20s, so we still need and expect downside over the next month or two, or heading into year-end, and that should give us another buy signal. Longer term, we think that oil prices, because the reserve life indices have shrunk so much, and the shale industry has such high decline rates, that we're going to see prices move over $70 in the second half of 2020, and that by 2022 we should be looking at north of $100 oil. In the case of natural gas, we're sitting depressed right now, under 50 cents for AECO spot. We think this winter they'll be in the $2 to $3 range consistently, and spikes maybe to $4 or $5. And that heading into 2021-22, we're going to see the Trans-Canada system finished being built in Alberta, and that we're going to see more takeaway capacity. And then we're heading into LNG in 2023 with the LNG Canada project on the BC coast. So we're going to see more demand, more takeaway capacity, and much higher prices for natural gas. And that's why we like both the oil stocks and the natural gas stocks for the long term. And we see significant returns both from large cap all the way down to the small caps across the sector, depending upon the individual's risk profile.
Are the oil and gas markets cyclical in nature?
Oh, yes, they are. Yes. Again, strong demand, you'll see high prices. Weaker demand and inventory build, you'll see weaker prices. They're impacted by economics, worldwide. The trade war is having an impact on oil prices now. The Iran sanctions, of course, has issues and impact. The weather will have impact. So if you have moderate weather in the wintertime, you're not going to have as much demand for natural gas. Weather of like hurricanes can shut in production as it can in the Gulf of Mexico. So you have, impacts, and it's the multitude and the confluence of all of those that kind of gives you a feel for, is it good times or bad times for the sector in the near term. But it's also based on, economic business cycles. And if we're near the end of a business cycle here, that's going to be dampening until we have the recession. And then when we come out of that recession, we'll start seeing, much higher demand. That's why we think we'll see $100 oil in 2022 on, because if we do have a recession, it's likely it'll be in 2020 or 2021. And then from there, after the recession is over, we look for stronger demand for energy and much higher prices.
Does OPEC still play an important role in the price of oil?
Yeah, they're the swing producer, and right now with excess supply, OPEC's had to cut back production. Venezuela, of course, is an OPEC member and has sanctions. Iran has sanctions. Saudi Arabia is the major swing producer because they produce, 10 million out of the 32 million or so of production that's in OPEC. And so OPEC will be needed in the next cycle because the rest of the basins won't be able to provide the million barrel a day increment of demand. And if you look at the data, now from the Baker Hughes weekly rig count, the activity level is falling, and drill counts are falling, which means over time production is going to peak out. Right now, the only positive you could say is that we're looking at an increase in new pipelines coming out of the Permian. So once those pipelines get the product that's been behind pipe coming on, that boom could take the U.S. production just a bit higher than it is now at 12.5 million barrels per day. But once that happens, then the decline rates and the lower drilling activity will have negative impact on those numbers probably by the end of the year. And then people will realize that the decline rates and the lack of capital investment means that there's not going to be sufficient oil in the non-OPEC area, and that the power of OPEC and the need for OPEC to increase production will then happen.
How big a role does geopolitics play in the oil and gas business?
Oh yeah, you see a Trump tweet, and the price of oil can go up or the price of oil can go down, depending upon what he's tweeting about Iran or what he's tweeting about China trade issues. Yesterday, for example, we had an announcement, or this week we had an announcement that Saudi Arabia changed the ministers of energy, and the minister of energy is a hawk who's willing to cut back production. And the price of oil went up to US $58 a barrel. That price is now retreating because we're looking at storage increases in the month of September. Plus, there's talk about Iraq having increased its production above its quota. So we'll see the OPEC release this week. And when that data comes out, that's going to highlight where OPEC is and if OPEC is complying still within their quota system.
We'll have more with Josef Schachter right after this.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Josef Schachter. Joseph, are trade wars bullish or bearish for the oil and gas markets?
Well, I would say mostly bearish because, if there's trade wars, it means, worldwide consumption is going to slow down because of the waiting for those issues to be resolved. China's having a capital expenditure slowdown. The United States is fighting with them and increasing their tariffs, which means less is coming in, so you don't have as much demand, for shipping for crude oil. Also, China, in the retaliation, has the ability to say we're not going to import oil from the United States or natural gas because of the tariffs. So, they'll take their business to Saudi Arabia and others, or even Iran, and say to the United States, look, you can't push us around. We'll buy from who we want, not from who you order us to buy from. And so there, Iran has, maybe not has all of the trump cards, using the spades comment from the card game. But I do believe that China does have quite a few aces and quite a few high usage ones that I think that they do have ability to thwart U.S. interests. And as we're seeing now with the trade issues, is it on? Is it off? And then more importantly, do the Chinese just drag it out until after the presidential election in the United States in November 2020? Hoping that there's a new administration and it's a Democratic one that's not going to be as intransigent and as pushy as the Trump administration has been.
Does China always take the long-term point of view?
I don't have enough knowledge on that, but my guess is yes. When they take decisions like the Silk Road, where they want to have a transportation system from China all the way to Europe with rail and high-speed rail, and then they're building airports, and they're making long-term plans to industrialize their country and move people out of the big cities on the East Coast into the center of the country and to the western part of the country. They're taking multi-decade decisions to do that, and so I think that they have that long-term game approach. And, again, when you have a managed economy where the party controls the economy, and has the ability to turn on the engine of spending or capex or the banks able to lend to, favored industries, be it wind power or solar power or electric batteries and electric cars, which China's pushing for, or AI, which China's pushing for, they have the ability to make generational decisions because if they want those industries, then they're going to have to back them for lengthy periods of time, and they've shown the ability and the desire to do so.
How important is Canada's upcoming federal election to the oil and gas industry?
To the oil and gas industry, big time. It's they called the vote today, so tomorrow's the beginning of the campaign. To me, the industry would love to see, of course, a conservative government majority. The worst thing would be is if the Liberals have a minority government and the Green Party has the balance of power with enough seats to take Trudeau over the finish line. I don't know what's going to happen. I think it's going to be based on the vote in two big areas, the 416-905 area of Ontario, Toronto area, and the rural, the outskirts cities, and the lower mainland of BC. So by the time some of us go to bed, on the night of the election, we may not know who's won because it could be that tight. So again, I don't know how it's going to go, but I do know that it's important to the industry. I'd point out the one thing, that even if there is, the Liberal government in power again, there is enough new capacity coming on, and if the Liberals continue to move on TMX, where the First Nations, the Indigenous groups own part of it or own most of it, we're going to have more takeaway capacity coming for liquids volumes, and there is projects underway to increase the natural gas volumes, so that even if we don't get the conservative government, there will be growth to the industry. But the negative view, by where the federal government in Ottawa does not show support for a major industry in Canada, that will halt and keep away foreign investment. But if the world oil price goes to $100 a barrel, we benefit in Canada, but not as much as if we had a government in Ottawa that was favorable to the industry in the next few years before we get to $100 worldwide prices.
Canada could already be in a recession, depending on what numbers you look at. If the country experiences a deep recession, how would that affect the oil and gas industry?
Well, in Canada, we're a big producer and exporter, so it really matters what happens to the United States economy. What is it when we catch a cold? If the U.S. catches a cold, we get pneumonia, or and the whole story is it matters what our export markets are doing and where how those economies are doing. But if you look at it from the point of view of the energy industry, the last good year the energy industry had was 2014. So we've been in recession since 2015, 16, 17, 18, and now 19. So the industry has gone through a major catharsis where it had to break its costs down and lower the cost structure. We had massive layoffs in the industry. The drilling industry and the service-related industry has gone through a very severe recession. You can almost call it a depression in terms of the loss of jobs and the revenue streams that they were able to have coming in the door. So I think that the energy sector has been particularly hard hit. Just like you could argue the precious metal sector was, and then this year the precious metal sector has woken up because of higher commodity prices. When you go from $1,300 up to a couple $100, it makes a difference. Especially if you've been lowering your break-even costs. The oil and gas industry has been lowering their break-even cost, and now if we do see recovery in commodity prices in 2020, they will be able to repair their balance sheets. A lot of people are doing normal course issuer bids. Some companies are raising their dividends. So they will come back, and the finances will come back, and that will create shareholder value longer term.
Joseph, is the lack of pipelines in Canada a negative for the economy?
Well, right now, the issue is both Canada and the United States with pipelines. The XL pipeline in the States is still in the political shenanigans. You have Enbridge with pipelines, Line 3 and Line 5 going through challenges in Michigan. So the pipeline issue is one, it's North America grid, so it's a North American issue. But I think in the end, people will realize that security of supply and the economic spin-off and benefits of the energy industry, we're not, we want to get off and clean the air. So you want to get off using coal and long-term nuclear. The key, of course, is that natural gas is probably the cleanest burning fossil fuel, and that over time, there'll be maybe new technologies and renewables will pick up, a bigger portion of the total need. But we don't want to lower our economic standard of living. I think most people realize that, every little incremental thing we do in Canada is important. But unless China and India get off coal and dung and nuclear, the world is not going to be a better place. And so removing coal, especially from India and China, and getting them to move to cleaner fuels is more important than anything in everything we're trying to do in Canada. So to me, pipelines is the smartest way to go. Rail is, you're filling up the cars going in one direction, and then when they empty them out, and then they bring them back empty. So the economics of using, rail is not there longer term, and the environmentalists who are pushing to stop pipelines are just creating a bigger problem, as we know from what happened in Quebec, where derailments can occur. And so, to my view, is I think the environmentalists are shooting themselves in the foot and the country in the foot by what they're doing, instead of saying the best alternative for now, until we get a bigger percentage of renewables, is to have pipelines taking natural gas to markets.
Are you surprised at I call it the sudden demonization of natural gas? Just a few years ago, we were being told it's a nice, clean source of energy. Now people are almost equating it to coal. What happened?
Well, first thing, I think a lot of people are hearing from environmentalists who are throwing bullshit out. The fake news. It's the Donald Trumps of the environmental world are just, if you say it enough times, people will believe it. The reality is not there. The science clearly shows that natural gas is the cleanest burning of the fossil fuels, but they throw fracking in, they throw other things in to kind of change the agenda and change the view. My view is people should know that, as we've seen in articles in the paper recently, that the environmentalists are being funded by anti-development groups that do not want Canada to have, that they want Canada as a captive colony to the U.S. for their energy sources, and do not want us to have export capacity on the West Coast, which would then mean that the Americans would have to pay full value for our resources. So, a lot of these energy development in Canada are not funded in Canada. They're funded by foreigners, especially in the U.S., and to me, that should not be allowed. If you're raising money from Canadians to oppose, the development of projects in Canada is one thing, but CRA should be saying no. Foreign money coming into Canada isn't. We're upset about the Russians being involved in the politics of Canada and the United States. Well, why should foreigners be allowed to come in and impact our environmental issue by funding the environmental opposition groups? I think it's totally lunacy.
Is the growth of electric vehicles likely to shrink the demand for oil and gas anytime soon?
Well, this year about 2 million electric vehicles were added on the road, so 1 million in China, 1 million in the rest of the world. When you have a demand of 90 to 100 million cars a year, that means, you're not anywhere near a large number yet. Potentially 20 years from now, you might have 20 or 30% of the cars, 20, 30 million a year, being sold. If everything goes well. But the issue then becomes, the batteries, they'll need changing after a period of time. What do you do with the batteries afterwards when you take them out of the car? There's environmental issues with them as well. And then the electricity for the electric vehicles is going to have to come from some source. And is that going to be coal or is that going to be natural gas? So I argue that the more electric vehicles are on the road, the more you should argue in favor of natural gas. So I'd like to see EVs become a bigger part of the solution. We need oil to be used in so many different areas. We use it in plastics, we use it in chemicals, we use it in, everything that we consume almost has some petrochemical derivative in it. And so we'll need more for that and less for transportation as EVs take on more market share. But the bottom line is you're going to need natural gas for that electricity creation.
Would you consider driving an electric car?
Yeah, I've had a lot of friends of mine who do have them, like them, and they like the power. The only, of course, is in Western Canada, most of us drive quite long distances, and so you want to have a vehicle that will be able to take you there, and then have the ability to get it charged at the final destination, rather than getting on the highway and finding out, oops, my charge is gone, And I think that really is the thing, is the battery life has to extend. And so we need to see the industry move the development of battery charging and how long the charge will last extend more. But would I consider driving and owning one? Yes.
Joseph, can you remind us again when your conference is in Calgary?
Yeah, it's on Saturday, October 19th, so people can go to www.schachterenergyreport.ca/conference. And for the energy report that we do, you can go to www.schachterenergyreport.ca, and that's where you can find information about our publication that we do. And what we have in the publication is twice a month we do a report, an interim report in the first half of the month, a monthly report at the end of the month, and then once a quarter we do a webinar. So there's a lot of information available to investors who are interested in the energy sector, and then we keep them up of what's going on, both on the companies that we cover and on the industry fundamentals on a regular basis.
Joseph, thank you so much for being on the show.
It was my pleasure. Thank you so much.
My guest has been Josef Schachter, founder of the Schachter Energy Report. You can find it online at schachterenergyreport.ca. If you have any questions for Joseph or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HouseStreet. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.